Hello and good morning. Welcome back to the breakfast show with myself, Neil, couch investor, and my co-host, although you should be on the other side. Voila, much better. Jose, good morning, good afternoon, good evening to everyone watching, but good morning to you.
Yeah, what's going on, Neil? Good morning, and thank you for switching us around. I felt a little bit weird on that side. But yeah, a lot of news. I don't know, great news. A lot of news impacting the sector, like always. I saw your title, Neil. We have an IPO filing that just came out yesterday. We also have some thoughts on, I have some thoughts on kind of like the big, beautiful bill and what it means for AI and semiconductor investors. That's what my title is focused on. So good morning to everybody here. Appreciate the support. It means a lot. It definitely gets these streams going. So thank you.
Yeah, no, for sure. For sure. Good morning to everyone. Lisa is in the house, the better version of the Lisas out there. So yeah, there was the first comment here that we got. So we're going to talk today about, yesterday tech fell. So we'll talk a little bit about that. Tech fell, value went up. We have the announcement that Figma is going to go public. Remember, Adobe tried to acquire Figma. Didn't happen. Adobe had to pay $1 billion in termination fee. And so this might or might not revive Adobe, right? The stock. We'll see what happens. I have a couple of things to share from Figma. And then, just general macro stuff. You want to talk a little bit about the BBB. So, and then, of course, we can answer questions as well. So let me first maybe share the heat map of yesterday, because yesterday was a very interesting day. Yesterday was the day.
Was not everything red, Neil? In my mind, everything was kind of red yesterday. Is that not a true statement?
Yeah, yesterday was the day they almost caught Jack Sparrow. No, yesterday was a red day, as we can see. I mean, red day, markets were flat, basically.
Yeah.
Like, yes, maybe red a little bit, but nothing really crazy. So yeah, you have big names like Nvidia down 3% almost, Meta 2.5, Palantir 4/4, Broadcom same thing, Tesla down a bit more. We've talked about that actually in the market open yesterday. But you then have value plays like United Health that were up 4.5%. I believe PayPal was also up yesterday. So it seems like yesterday was a day where tech got beaten down a little bit. Again, not something crazy,
not much, right? Yeah.
I mean, we've been going up and up and up for the last 2 months or so. So, I mean, big freaking deal if you drop 4% after going up, especially Nvidia. Nvidia has gone up for 7 consecutive trading days. So,
oh wow, it needed a breather.
Yeah, exactly. One little drop. I don't think will change. I don't think will change that much. And yeah, maybe for the others, maybe for the value plays like United Health, going up a little bit makes sense as well. I'm now very happy that I have a couple of shares to balance it out a little bit. Of course, it's not going to move the needle much, but I'll take what I can get. PayPal was also up, I think, yesterday. So we can see here on the watch list who was up. Apple was up because
because
said
somehow
they suck at AI.
they're a value stock now. They're no longer a tech play. That's why.
Intel
That
was up
solidifies.
2%.
Another one, not a tech play anymore.
Exactly. The Trade Desk was up 2%, and then Reddit another 1%. But I do think that PayPal was also up 1.3%. So it was a bizarro market yesterday, but it makes sense.
Neil, what did we have yesterday outside of kind of like I feel like Jerome, did he talk yesterday? That's again a market
Jerome.
I don't
It's your friend.
Is that
Jerry?
That his name? Yo, Jer, what did you say yesterday? But I think the only real big thing was the big beautiful bill, right? That I followed, right? I don't know if there was other stuff out there. So I want to see if you again. I'm too stuck in the semiconductor space to really care much about anything else.
No, I don't think that our friend Jerome spoke yesterday. I think the focus was on the big beautiful.
Was that? Oh, okay.
I think
know there was other macro events that happened or any reports.
Yeah. Quick hello to Dividend Dult.
Lisa says yes, he did. Sigh.
Really?
My God, Neil, this is what I have you here for, and you're not even doing your work. Oh my gosh. L's on chat for Neil.
Let's see, Jerome Powell. He spoke yesterday. What did he say?
Well, we would know if you were on top of it.
I know there was a hearing. What was it, last week? But I didn't see, or I didn't hear anything from Jerry yesterday. But
Mark says he was. Powell was. Yep, there we go. Thanks, Mark. Appreciate it.
He was in
Mark,
Portugal
let's
chilling.
Neil.
He was in Portugal chilling a little bit. It was an hour split between 6 chiefs. He didn't say much. Okay, so I guess that's why. Because I am here on X, and usually when he says something, like you see his face pop up on every other post. But this time I'm scrolling and scrolling and scrolling, and the only thing I see is non-Powell stuff. So no, okay. I found one useful one. Huh.
All right, go ahead, Neil. Give us some information. Give us that alpha.
Vamos. So we have Jerry, our friend.
Overreacted. In fact, we didn't.
Chair, would the Fed have cut more by now if it weren't for the tariffs?
Oh yeah, I did remember this.
So I do think that's right. In effect, we went on hold when we saw the size of the tariffs and essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs. So we didn't overreact. In fact, we didn't react at all. We're simply taking some time. As long as the U.S. economy is in solid shape, we think the prudent thing to do is to wait and learn more and see what those effects might be.
Chair, would the Fed?
Yeah, so now I remember that he said this, that he said that they would have cut rates if not for the tariff situation, which, I mean, could be seen as a bullish thing, especially if the tariffs do not change anything drastically, which currently is the case, right? Currently, for every CPI, PPI, PCE reading, it was better than feared. So 2 rate cuts this year, I think, are going to happen. And then currently the dot plot is 1 next year and 1 the year after that. But I think they're just going to do another 2.
I mean, in theory, what I hear from that is if they get more data, that nothing is really changing due to tariffs. It's the green light for cuts. That's how I would protect that, right? People we see here like too late, right? Slow. To me, it's just someone who's just like looking for data. It seems to finalize the point, and maybe sometimes the data might be a little bit too slow. But that's how I see it, right? So if data comes out, if it continues to come out that everything looks good, it gives that green light for massive cut for cuts in general.
Yeah, I mean, again, the longer we can stretch this rate cutting cycle, I guess the better it will be for the bull market, bull market to continue.
Right. So then we're getting a lot of questions here from Figma. I think you did a video on your channel yesterday about it. Did you? No? Or was it just a live stream that I saw the thumbnail for? Maybe that was it. But this is one that we saw Adobe want to acquire. Is it like a competitor of Adobe? I don't really recall too much about Figma. Or do they have more of like a unique product that is maybe not as competitive to your Adobe? And I saw someone kind of compare it to Canva. As a content creator, Canva is probably the one I use almost on a daily basis. So any quick one-on-one on how these compare against those two players and your thoughts on this IPO?
Yeah, so I mean, the main reason why Adobe wanted to acquire Figma is because they see it as one, an added value, and two, yes, a competitor in that space. I mean, it was a very expensive acquisition. I think $20 billion was the number, and so I mean, let me share here a couple of.
I also think it's wild that there's that thing that if the deal doesn't go through, you still have to pay some crazy amount of money.
Yeah, I mean, the thing is, it's the deal not going through, not because you don't want it,
Yeah,
but because the regulators didn't allow it, and that cost you $1 billion.
Yeah,
Pretty big deal. So we have here some information provided by our nice partner here, Fiscal.ai, previously FinChat. So Figma, right now, they filed their S1, 13 million monthly active users, 95% of Fortune 500 companies use Figma, $821 million in trailing 12 months revenue. That was up 49% year over year. Net revenue retention rate of 132%, and non-GAAP operating margin of 18%. So you can see, just based on these numbers right here, why Adobe wanted to acquire them, right? These are growth rates that you're not seeing with Adobe anymore. These would have accelerated the growth for Adobe and would probably have made Adobe worth quite a lot more than I think right now, $400 or a bit less than $400. So it would have made sense. If we look at here the ARR by annual cohort through the last quarter, I mean, looks like a pretty good business with a ton of momentum there. And here you see basically revenue wise how they've been growing. Now there is, I think, one period right here where I don't know why, but total operating expenses have increased by tenfold just for this part right here. So I don't know if this was, I mean, probably this was a one-time thing, one-time compensation across the board, and they just put it in R&D, sales and marketing, G&A, and that's why you're basically seeing usually, I mean, total operating expenses.
The only other thing I could think of, Neil, is maybe this company started to invest a lot in kind of like some AI contracts for training or something like that. I don't know what they might. I mean, we're seeing that, and stuff like that might be more like whatever they're working on could be like on a yearly basis. That it might be one quarter that gets hit pretty hard.
Yeah, but one quarter, usually this thing gets stretched out, right?
You would still stretch it out throughout the thing.
Yeah, and these are operating expenses, so not capex. So I don't know. It probably has to do with some one-time.
Because it's a big jump. The biggest jump I saw was there on R&D. That's the.
I mean, almost. Yeah, I mean,
almost
even
10x.
G&A. I mean, G&A is 10x.
G&A. Yeah. Oh, so, wow, that's weird. That's pretty weird.
Yeah. So definitely this quarter was like, I don't know. Maybe there is more information on their in their S1, which let me try and open that, because their website is very, very nicely done, but it's
And their
it's
website,
kind of
if you want to go, I remember it's not really a true competitor to Adobe's kind of creative product. I do believe what they help is kind of help design some great UI or user interface for an
Yep.
app development using kind of so I saw the way that obviously being kind of like that graphics play from Adobe can interact really well with this, and I think some of the other competitors out there have some of this option in their toolkit. So I don't see it as it's a true competitor to either Canva or Adobe. But I do see how it could be kind of like a great add-on. Like I don't think much app developers or any form of developers right now are using Canva or Adobe to kind of make sure their app looks amazing.
Yeah, I mean, which is why Adobe wanted to acquire them, to make sure they have it all. Okay, I am now on the S1. So let's see what we've got here.
Gross margins of 91%, pretty nice. I saw.
Yeah, I mean that makes sense for a digital native product. 2/3 are non-designers.
Oh wow, what the heck do they do then?
Yeah, exactly. I'm like 2/3 are non-designers. So what are we doing here? But okay. I mean, it would be based on the numbers we've just seen. It would be interesting to see how much value they get from the public markets. One ask here: how overvalued will it be at the open? First of all, I don't know exactly when they'll go public. Right, they're not public yet. They just filed this, so we'll see.
Yeah, they
We'll
still
see.
have to update various times before we even get a share price or something of what they might think of doing it.
Yeah, how much money they want to raise, etc., etc. So this is basically it.
Yeah.
Ideate, visualize, build, ship.
Are they saying Netflix is their customer?
Where do you see this?
Well, that's the Netflix app. Like, is
Touché.
that a way? Is that them kind of giving like a little hints of?
Okay, let's see. So I just did a search here. So every day, billions of people around the world use apps, websites, and other digital experiences that are made in Figma.
Yeah,
They're looking
Uber,
up directions on Google
JetBlue,
Maps.
Netflix,
Yeah.
Mercado
Mercado
Libre,
Libre.
LinkedIn.
Oh, okay. Now I like it. Now I like it. But my question is, and the chat can definitely correct me. Like, once you do your app,
How does it grow from there, right? Netflix can grow dramatically from subscribers, but like, what's the winning after that for Figma?
Because the retention rate is quite high. So my question here is like, Duolingo. Oh yeah,
Yes,
Duolingo
I mean,
guy.
yeah.
So yeah, my question is, I mean, for I'm sure maybe some are using it. So please enlighten us.
I
Once
wonder
you're
if they
done
might also.
building.
Yeah. Go ahead. Sorry, Neil.
No, continue.
I was gonna say, I wonder if they have some form of like analytics or something platform in the end of it, or But the thing is, also apps don't just stop being developed, right? I mean, you're always constantly getting even the UI itself.
Yeah, so that's the thing. If you build the app, UI UX, once you're done, you ship it. Does Figma do everything in the background?
Yeah, to get that more money, right? That's definitely a good question.
I mean, it's probably written in their S1, but I'm not going to read here.
There we go.
Actually,
Right here.
Speaking of, let me zoom in here. So our subscription model is designed to meet the diverse and evolving needs of our growing community and customer base. Blah blah blah. So to meet our users where they are, we offer a variety of ways to try, use, and purchase Figma. So automated and highly efficient self-service option available through Figma.com. To support our self-serve offering, our marketing team utilize organic and paid channels. Okay. direct sales. Okay, maybe so. This is better. Their plans. So starter plan is free, and is designed for working on personal projects. Professional plan, organizational plan, enterprise plan. Okay, makes sense, I guess. And then okay, then you pay per seat, I assume, for all of
And
this. The
different
viewer
seats
seat, collab,
you
yeah.
use. The full seat.
Very interesting.
And man, they should have called the full one the full table instead of a full seat, because it's all the seats, so it's like the table. They need to get better naming.
Yep, short it. So here's the pricing basically. So starter free, professional $3 to $5 per month for the collab one. Content, okay, it always goes up as you add more, which makes sense. So these are the pricing. It's not that crazy expensive. Not that crazy expensive at all.
Yeah, and Georgie here just mentioned. I can share. I don't know why. Yeah. So management clients want change all the time. You're never done, kind of building these stuff. So I guess that's the thing. And I mean, I feel like now I'm wrong. I was kind of maybe too aggressive trying to think what's the after the seats, but there's a lot of companies that do really well with the seats. I mean, you think about kind of in the semiconductor space, you have your Cadence, your Synopsys that really just pretty much are seat players. You have your Autodesk and stuff like that. So just the seat basis, it has been proven to be a really strong business within itself. We also have Nathan here. Nathan, I use Figma every day. Enterprise, best design software from experience. No chance I'll go back to Adobe. So Nathan, you're saying it definitely was a competitor to Adobe for the task that you were doing. And now question for this Neil. Let's see the operating expenses. What happened?
So one of the explanations here are, but is it for the same day during the year ended 24 as compared to 23 as a result of the May 24 RSU release and the 2024 stock option grants? Okay, so that's one explanation for that. So yeah, probably bonuses, stock-based compensation. It seems like
so it seems like that $1 billion was paid off to a lot of that they got paid off to a lot of CEOs and stuff like that.
Seems like it. Seems like it. Yeah, so it does seem like it was because of this. Okay, no, it's good. It's always good to know. I mean, because a 10x increase is always good to know why that happened.
So yeah, and here Nathan is saying totally, and they're taking more and more market share with the more that they add. But then we have Adam here saying that they're taking away from Adobe XD. So I guess that's I think I'm getting a little bit that Adobe has a platform like this, but it's very weak. So instead of kind of building it, they wanted to do this Figma acquisition to buy it. So Adam is saying that there's more taking up opposed to that, opposed to the whole creative cloud, I would say. I would love to hear from Nathan any points here, if there's any counter argument here. But now, I like how you kind of started. Where is this going to be? If we see this priced in at like a 20x price to sales valuation, does the market go back and say, look, maybe we should give Adobe a higher valuation as well? Or does the market go, look, this is just another thing that we were saying that AI and all these other competitors are coming. Now we're going to punish Adobe even more because this is a company that is growing at a strong year-over-year basis. Where March 2020, almost like that's at least 50% growth, I think, from March of 2025 to March 31st of 2024, even though Adobe's only growing at about 10%, 11%. So it's a huge difference. Obviously, the size of the revenue matters as well. And stuff like that. But I think sometimes the market just looks at those percentages and say, look, this one's gaining market share. We're going to punish Adobe even more and more than it's already been punished.
I mean, I know they operate in similar in the similar industry, right? Creator industry, design industry, for sure. Mm-hmm. One is of course growing faster than the other. But it would be interesting to see, because Adobe wanted to pay what, $20 billion, I think, for Figma. So it's going to be interesting to see if they go public at 20 billion or more.
Yeah.
And then if they do get a premium, then I would say
20 billion. I think it would actually be. I personally would think more, Neil, right now, because if we look at, is that March 31st of 2025? That's only that's quarterly, right? That's not. It doesn't say on top last trailing 12 months, right? So if you assume times 4, it's a little bit about $900 million in run rate of annual run rate. I'm gonna say you give that at
plus net income is positive. Like
yeah,
it's
plus
net income, not net loss.
Yeah. Well, it's obviously a big gap. I think you're going to definitely give it a price to sell higher than 10. That's what the market is definitely doing right now. So typically in the software space, you tend to like that price to sales ratio higher than 10. So at least 9 billion, but Adobe is about to pay 20 billion. I think that's going to be a crucial thing. It's like Adobe was willing to pay 20 billion. What has changed? Or is this kind of getting that same punishment that AI can also come for this ecosystem, that now it's no longer worth that 20 billion that Adobe was willing to pay back then?
I mean, I guess with this one, you can make the case that AI could also start designing apps in the future, right? I mean, again, this is an offering that Figma could offer, right, at an extra charge. But then the same thing can be said about Adobe, right? Yeah, you can generate images and you can do all of that in Adobe and edit them and make sure that they're licensed, etc., etc. So, I mean, it's going to be, because again, 20 billion was a very, 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 very big premium back then for this business.
So Adam mentions, I as a product engineer use Figma nearly every day. It's a great tool, smooth collab between front end dev and marketing and product team. Adobe nowhere near close to this. Appreciate that, Adam. I was going to say something.
I mean, my question to you is, because you had Adobe and then it's now on your watch list, at what price would you be comfortable buying something like Figma? Because if Adobe was interesting, wouldn't this be interesting?
My reason for Adobe being interesting is definitely the valuation point. Kind of like it's the AI moat not eating it, the market fearing the AI moat eating it, and this not going to actually die from the AI curse. So that's my bullish, kind of one of my main reasons to be kind of having that on my watch list. I think it's more of like that valuation play, Neil. Like, kind of, have you done it with United Health? Now, if this one comes out in the other spectrum of the AI valuation, where the market gives it a premium for some unknown reason, then I wouldn't put it on my watch list. But if it does kind of have that same negative sentiment, and just a quick information that we've gotten here can validate that this definitely has a very strong competitive product from the few engineers and designers that are using it, and have very well stuff to say about it. So depending on how the market looks at it, if it's another one where AI is going to destroy it and we're going to value it like crap, then that would be a little bit more susceptible to be a purchaser. The reason being is it seems like this is going to be a platform that has lots of data, and platforms that have tons of data are the ones that are going to be winning this AI transformation race. Now, another thing that I was going to say, the bullish case for here is going to be when AI agents are real and the AI agents are developing apps. They're going to come here and use this platform to collaborate with other AI agents, and you're just buying massive amounts of seats for all these AI agents all over the world.
Yeah, I mean, it's an interesting world. My question to everyone that's using Figma, you use Figma to do what exactly? Like, are you an app builder? Are you a website builder? What's the reason you started to use Figma? Maybe marketing purposes. What's the reason you use Figma and not, I don't know, another solution out there? Going back to valuation, I mean, $821 million in revenue growing 46% year over year. 20 billion is really a lot, no? It's 20 billion is a ton
almost
of money.
25x, I think, right?
Yeah. Almost 25x. Of course, if it grows 46%, then 12 months from now it's less than that. But still, it's a very good question. Very, very good question. Nathan says here, Photoshop is becoming irrelevant for most non-professional users. They have stock photos and PDF as modes. I mean, yeah, of course, if you don't need Photoshop, then you would never have used it. Although you can maybe just use Adobe Express now online or Canva for free. But no, the thing for Adobe has always been towards professionals, I guess.
Yeah,
Thumbnail
I
designers
think,
and whatnot.
This seat business has always been like that, I feel. I mean, like even in the electrical engineering world, there is you're paid seats to kind of design chips, like boards or stuff like that, like your cadence and your synopsis. But there's also plenty of free versions where you don't need the full stuff from it, and it's still pretty popular. But we can still see how cadence and synopsis have done really well. And I kind of put these in a similar stuff, that there's like a professional use case somewhere in between, and then also the kind of just hobbyists. And they're professionals in different aspects too. For I guess developers and product design, this one might be the professional way to go about it.
Yeah, Nathan says here he uses it for apps, websites, for product design and development, brainstorming, slides, whatever design related. This is not photo based. Yeah, no, that makes that makes.
And Nathan, appreciate all the descriptions and thoughts you're sharing.
Yeah, seems like his. I mean, the NF in his name might have been designed in his picture. Might have been designed in Figma, maybe. I don't know. But yeah, I'm trying to, because back in the day, I also built, like I designed just an app for fun, but I used another. I mean, it was 10 years ago, so I guess of course it's going to be something else, but I can't remember the name. There is I don't know if you want to add something more, or we can jump to the next.
We can jump to the next thing, but there were some interesting questions here, Neil. I like this one called. So I kind of talked a little bit about watch lists, but I'm pretty sure we can both discuss when you put something.
Going to put this one.
What are key indicators you are looking for? So it's weird. I have like different watch lists, Neil. There are like the watch list of companies that I really know in markets that I really understand. And it's just so first, just in usually my watch list is a watch list where it leads me to do more research. And that research, me wanting to do that research, is due to a variety of things. Is this a stock that has some technology that I want to learn a little bit more about, especially in the semiconductor, in the AI space? Is this a company that I believe might be a little bit overvalued? Can I learn a little bit more about it? So my watch list is more my research list. Can I move it on to whatever the next premium or high tier watch list that I have, which is now more like, oh, are you ready to join my portfolio in the future? So it's just like a stepping ladder, called. So it's really more just for the research phase.
Yeah, I mean, for me, key indicators, if it's to go on the watch list, like Jose said, it's probably something we're going to touch on the Tesla thing right now, because Tesla is up 6% on the production delivery numbers.
Oh, nice.
If it's a company that I like and understand, if it's for the long term or the short term, so if it's an overreaction, then I might see an opportunity, I put it on the watch list and I start to investigate. But as we've seen over the last couple of weeks, when I put things on the watch list and I investigate, they tend to jump in price.
So just let us
quite
know before you put in the watch list.
quite significantly. So maybe I might just go the Stanley Druckermiller way. It's invest and then investigate, which, to be honest, it makes sense, right? You don't have to put the whole house on it. But if you open a position and then you start to investigate, if it goes down and you like it even more, you can add more. If it goes up, then your little position is already increasing. We're also going to talk about Oscar
And
in
then
a bit.
yeah,
In a bit.
I like that Neil invest and investigate. Obviously, don't bet the house, but like not a degenerate gambler, but 2 to 3% isn't going to destroy a portfolio.
No, plus, I mean, the fact that you are investing and then investigating means that
Yeah.
there is something there. There is something interesting with that company. So quick switch to Tesla here. So these are the production and delivery in numbers for Tesla. The expectations were 385,000 EVs delivered. The number came in at 384,122. Small miss, and I mean, the stock's reaction right now
Wait,
is
what was the expected delivery still?
385,000.
Oh, okay, so about 800 miss.
Yeah, the stock is up for 5 to 6%. So I guess this is again a case of better than feared. Better than feared. Production-wise, 410,244. They also deployed 9.6 gigawatt hours of energy storage products. I will have to check again what last quarter, because I think last quarter we were pretty close to that number, and 2 quarters ago, I think it was 11. So, okay, so last quarter, this was 10.4, and the quarter before that was 11. So it did go down a little bit. It did go down a little bit this quarter. But I mean, still, I think for the whole year, this is going to be quite a nice business for them. I mean, I'll be honest, if it wasn't for the energy business, I think the stock would have been already slashed in half, if not more, right now. So, yeah, I guess this is just better than feared.
How was this? More important, the production. How was this? Especially since I know one of the biggest protection to the bearish thesis for a lot of Tesla bulls was this transformation of the Model Y or the update Model Y. How has production changed from a quarter ago? We can see here Model 3 and Y, 396,000. Is that a huge jump from last quarter?
Let's see. So definitely a big increase. Definitely a big increase in production. So last quarter, production came in at 362,615, which you can see right here. But remember, last quarter we had that big Model Y refresh. So you get impacted by that. The quarter before that, which was the fourth quarter, production was 459,445. But it's the fourth quarter, so usually you get that push. So I guess, I mean, the fact that we are already now at 410,000 is probably a good thing. But yeah, it's still a miss, but I guess a smaller miss than expected. And energy is still doing really good. My only issue is that this is basically what the stock is doing pre-market. My only issue is that, of course, we are now in the second half of 2025. And correct me if I'm wrong, but I don't think I have seen any new and more affordable models that have been launched. So, yeah.
I wonder what's gonna if I mean, I'm pretty sure that's gonna be a question during the earnings.
I mean, it's not going to be a question, because usually they write it in the shareholder deck. So it's going to be did they write it again or not? First up, thank you, Roberto, for the super chat. I wonder where this is from. GTQ. Mr. Couch, oh, thank you. Do you have a Discord? I do not. I was thinking of
Guatemala.
Quetzals.
Yes.
Quetzales. Yeah, nice. I was in Guatemala in 2017. Very nice.
Oh, nice.
Very nice country. I don't have a Discord. I was thinking about maybe starting it like 2 years ago, but I was like, I don't have time for this. Plus, now we do live stream, so it's 10 times better.
It's 10 times better. I agree. Just quick shout out to Martin here. Martin mentions market will go down this week due to labor data, right?
Market will go down this week due to labor. I don't know. I don't know if the market will go down. Let's just remember that the markets usually do the opposite of what we think is going to happen. But labor data, when is that supposed to come out? And if it came out already, then I will try and find it. But in the meantime, let me touch really quick on Oscar. So Oscar Health, as you can see, is now pre-market at $18. I believe the stock is down. It was down way more yesterday after hours. I think so. No, it's down a bit. So yesterday it was already down 4.6%, and now pre-market we are down 12% because one of the other players, American for-profit healthcare company called Centene, worth $28 billion, they crashed 32% after hours yesterday because they pulled their own guidance because of uncertainties and rising costs of Medicaid and ACA. So they got that announcement and it pulled Oscar down as well because they operate in a bit of the same area. The thing here is that Oscar, from what I've read, they were already prepared for such a thing when they provided their own guidance. Plus, I do also think that they have way less exposure to major changes than Centene, for example. So, I mean, if you missed the run up from $14, $15 or so the last 2 weeks, maybe right now the pullback could be worth buying. I might actually just put the investigate chip right here. Although I did talk about it and investigated it when it was a bit lower than that, but then it ran up. But now maybe I'll just open a small position and see where it goes. Wealthy Readings here on X, great follow, great account to follow. He says buy. He's putting the house on it, and with which I assume this means you have dumped the girlfriend because well, cannot sell the house then. But yeah, it's I will see this as a short-term potential long-term opportunity, although I do have enough positions in my portfolio. But when I see opportunities like this, I mean, it's market cap wise, it's a small company, all things considered. It's a company worth $5 billion or so. So yeah, so the house he put the house on it, she dumped him. So this is the thing we do in the investment world. Yesterday I was screaming at my wife, and today we have viewers here that are dumping girlfriends to put their house on certain stocks. I don't know if that screams the top or not, but
yeah, definitely not. I don't know.
But yeah, this is basically why Oscar is down pre-market at the moment. Would not surprise me if we see a lot of buying action, because according to some technical analysis folks on X, and then I asked basically Grok and Perplexity to explain everything to me. Let me pull this up because this is quite interesting. This is the use case for AI right here, folks. So this account right here, Long Investor, said the following. Oscar dropping down to the 0.618 fib the day before it completes a golden cross. To
What?
me, yeah, exactly. To me, this is like a Lord of the Rings quest or whatever.
Yeah.
So Grok and Perplexity explain this to me in simple terms. I don't understand TA. So Grok said the following. Technical analysis, basically a crystal ball. So Fibonacci retracement finds potential support levels where a stock's price might stop falling using ratios like 61.8%. For Oscar, dropping to this level suggests a possible buying point. A golden cross happens when the 50-day average price crosses above the 200-day average, hinting at a price rise. So I guess this could be a good buying opportunity according to, and of course, don't forget to thank the AIs every time, because you
Yeah.
never
Oh,
know. You never know what might happen.
I mean,
Let's see.
you're just wasting electricity, Neil. Just wasting electricity.
It's not my electricity, so I don't care. Then as Perplexity basically saying the same thing, which means that this thing right here is a bullish thing.
Man, you
a
asked
bullish
both Grok and Perplexity. You don't trust AI?
No, I just don't trust Grok, because some of the times either it doesn't understand my question or it just never answers. I'm like,
It never responds. Yeah.
yeah. So I ask Perplexity. So I mean, clearly now that you put the other one here, then Grok has to answer, because I mean, it's a fight between AIs.
Yeah.
It's a fight between AIs here. So yeah, so Oscar might be interesting for a nice little trade. Maybe Zeta, in the price goes up after couch video. Zeta looks interesting. I think Zeta is, yeah, it also pumped the couch pump, and now it went back down here.
I'm gonna start using TradingView, and I'm gonna get your logo and just put, every time you do a video, I just put that pump right there, the image
yeah.
there.
No, it's interesting here as well. It went above the 200-day moving average, couldn't stay, and now we're back under. That's the basic TA that you get here from us. But yeah, interesting place, I'd say. Interesting place. I mean, if we go back to the main topic, the one that we started with,
Where did we start from? Oh, okay. Yep. That.
Yeah, the tech went down yesterday. Value went up. Could this be the start of a little rotation? Maybe, maybe not. But there are definitely some opportunities out there in names that, yes, scream value, but value could still outperform because, well, these companies are still doing well, and maybe there was an overreaction with United Health as a main example here. Plus, yes, a lot of tech companies are just overextended, are just overbought, and so a little pullback didn't hurt anyone. So
we got some interesting questions here, Neil, that I wouldn't mind
go ahead.
Taking. I like this one. Jose Couch, how do you guys decide to invest in a particular stock for long term? Say Jose selected GitLab. What was the analysis here for a long term hold, and how do you decide when to enter? So for me, I am very bullish in the overall innovation of AI technology, and I hate using this word, but it is. But most of my investment theses are based on the theme that AI is going to continue to innovate this space, and I tend to follow it first through my semiconductor companies, more importantly, NVIDIA. I think NVIDIA is so crazy, Neil. I listen to NVIDIA on a daily basis, not because I care about the stock price and what it's doing on a daily basis. I could care less about that stock price on a day-to-day, but it's such a top level in this AI field that any type of press release, anytime the CEO or management talks, they give you a little bit of information of how AI is transforming. They talk about kind of AI agents. They talk about robotics. They talk about the needs for data center, for infrastructure. And that gives me, okay, look, I know AI is very bullish right now. Now I know from these CEOs and these managers, where is the right place for me to start looking for investment potentials. As now I know what this growth rate could be, what this growth opportunity can be. And one of the things, for example, with GitLab is, okay, I see a lot of AI assistant coding becoming increasingly popular right now. What are some kind of platforms that are assisting developers with that? So, and ones that maybe are in, I also like to look for that growth mentality. Luckily, I also come in the engineering field, so I do have a lot of engineering friends in all different types of markets, being civil, being software, being electrical, being robotics, whatever. So if I don't know the software or the indication itself, I can go and text a lot of them and be like, hey, have you heard of this solution? What would happen if this solution was to disappear? Would you be pretty upset? And a lot of people that I asked about GitLab, the answer was yes. This is this DevSecOps that I use on a daily basis. And while there are some solutions that can kind of help me with it, if I was to lose it right now, it would definitely suck. So it's more of just first understanding that theme investment, understanding where the growth opportunities lie. The last on my list, to be honest, Neil, is the numbers. The reason the last one on my list is numbers is because I feel like sometimes when you look at numbers first, it creates a bias on what direction you want to think of that stock. So first, I want to get the whole picture of how the market, the consumers, and everybody else uses it. And then after I have my own thoughts on that, I look at the numbers, because the numbers, in theory, a well-run business can change those numbers around in a few quarters, in a few years. So numbers are usually the last thing to eliminate that bias of, look, this looks pretty crappy right now. So I'm pretty sure there's a lot more, but that's just the easiest and quickest way I could have explained my overall thought process and when looking to invest in a long-term hold.
And is this why you selected also GitLab?
Yes. So I went through that whole aspect of it. I've messaged a lot of my software engineering friends, and throughout the process, and a company with less, I think $10 billion is like, this is, I also like exposure outside of the semiconductor space. And it's like, I don't want to just keep buying chips. I want to see what their next generation informs of stuff is moving into.
Okay. Oh, makes sense. Would you say that a GitLab is similar as Figma, but in their own fields?
Like, if I would think so, in its own way. You can kind of compare them, not in the same industry, but within their, like you're mentioning,
in their respective fields. Yeah,
I would think so, and that's why maybe kind of talking. I think it was Adam makes me want to go back and see who I might have in my friends in my phone that I can talk to about kind of UI development, UI UX, and all that stuff, and see how strong this could be. And then I would start to look of who their competitors are. What kind of AI solutions are they using? Are these actual real AI solutions? Because there's some companies that just say, look, I have an AI solution, but it's just a really quick link to an OpenAI API. It's anything new. What has their presentation shown about their AI usage, and all that would kind of be part of that thesis building.
Okay, so with that said, before I answer, first up, GitLab, company worth $7-8 billion, right? What we see here is that this is a company that generates $804 million in revenue, growing revenue in the last 12 months, 29.3%. It's expected to grow 24.2% in fiscal 26, then bottom out here in 21.9% year-over-year growth, and then accelerate 23% year-over-year growth to reach $1.4 billion. This is a company, of course, that is public already, that has come down quite drastically. Again, I made the comparison with Figma here because revenue-wise, they're not far from each other. Revenue generated over the last 12 months. Of course, Figma is growing faster. Would you say that $7 to $8 billion is going to be cheap for a company like Figma? And this could maybe push a company like GitLab back above the $10 billion mark. Since, if we are going to compare, it's not similar business, but it does feel like in their respective fields, they are regarded as a crucial aspect in your workflows.
Yeah, and that's what I think. Here, Mohamed's, I'm pretty sure I'm butchering. Is not the aspect of it actually is a true competitor or anything. It's like what Neil was mentioning. Is can it help throughout the workflow process of kind of is there some form of similarities? But I agree, it's more likely more like a GitHub than a GitLab.
Okay. Interesting. I mean, gross profit margin, of course, very, very high. Operating margin still negative. So I guess that's something they have to fix. And I guess that's also one of the reasons why Figma will probably be valued at, well, over 10 billion, might even be 20, I don't know. But yeah, it's interesting. It's interesting. And of course, all of this is
Yeah, but then
available.
on fiscal.ai.
Exactly.
Yeah.
You should have finished that.
I was going to say, yeah. I mean, the only other thing is, I think even if you have kind of similar business type models, being in different industries, one being more kind of like coding engineering based, and one being more like a creative aspect, the market always kind of gives different valuations just on those two things. And is that the right approach? I'm not sure, but yeah.
Yeah, no. To go back, I guess, to the main question. I guess it's similar. I guess it's similar to you. So first of all, I would only really invest a big chunk for the long term in really companies that I know inside out.
Mm-hmm.
Companies, most of the big companies in my portfolio are usually companies that either I use every day or I've been studying them for the last X amount of years. So I know exactly, when I talk with some people and I say, yeah, this company has this amount of monthly active users, that's the gross margin, that's how much free cash flow, that's how much shares outstanding have come down. They think I'm a freak. But it's just because we know these companies inside out, which is why we invested in them.
Yeah.
And you have to understand, like, if you work in the industry, or even if you don't work in that specific industry, but you've done your research, it makes sense. Like, it's way more comfortable owning something you know than something you don't know.
100%. It's and it's so funny that sometimes when you know it so well, you think it's such a general knowledge that it's when you hear somebody make something wrong about it, it's like it's how is this a reason for the stock to be up or down? Isn't this kind of something we all knew before?
Yeah, no, for sure. A super chat here from Zakaria. I think it's from my channel, but for once,
it's the opposite. That's fine.
For once, it's the opposite. So first of all, thank you very much for the super chat. Really appreciate it. Question for Jose, maybe myself as well. From Technical, does it make sense to have a portfolio that is focusing on the full supply chain of semiconductors? Okay, it's a question for both of us. Semiconductors, and like having NVIDIA, AMD, TSM, ASML, CLAC, Applied Materials, Lam Research, and then ARM. I guess this is Cadence. And for me, for Neil, what is your take on such a portfolio?
If I was to go, I'm a firm believer that semiconductors are going to continue to outperform the market. That's why theoretically, whenever I invest in ETFs, I focus on SMH, SMHX, before even thinking of putting money in SPY or Qs. The world runs in semiconductors. There's no question about it. You're going to continue to see massive innovation in this space. So unless it makes sense to have a portfolio that's focusing on the full supply chain, definitely it's true. But now when you're having all those names, especially depending on how you do it, if you do equal weight, maybe a little bit different, but now it starts to really, really look like that semiconductor ETF that I was talking. So if you're thinking of doing something like this, if someone was to tell me, Jose, you can only invest in one company ETF for the next 10, 15 years and whatever, it would just be a pure semiconductor ETF, which is pretty much what you're building. So I like it. Just understand the risk that Semiconductor market, while it's not the cyclicality that it used to be, is still always a cyclical market that does depend on the data center spending, on consumer spending, on enterprise and business spending, and those equipment players also depend on the growth rate. So market is open, but overall, I like it. You just have to be prepared with the massive volatility. So Tristan, what ETF I would go? I do SMHX is my favorite, the fabulous one. But SMH is also one that I own.
Yeah. So before returning to that question, market is open at the moment. Not much movements, right? Nothing much is moving at the moment. Tesla is up now only close to 3%. Palantir is up 1.7%. And yeah, it seems like for the majority of it, we are flat-ish. Adobe is down 1.7, but not much. Let's look at the watch list real quick. So let's actually do, from red to green. So Pinduoduo down, Micron down again, so under 120. Trade Desk, Intel, NVO, so Novo Nordisk, Amazon is down, Meta, Rocket Lab, Oklo, Google basically flat. Reddit, PayPal are greenish. New Holdings, HIMS. So who are the big winners right now? Not surprising. Still, Robinhood, Palantir, Bitcoin, Tempus AI, ASTS, Nebius, Marvell is up 1.5%. And
nice. Tesla gave back some of the gains, it seems. It's up to like 3% now.
Let's see.
And just if I may, real quick, to Zach's question is, this is pretty much more my portfolio, Zach, where it's a lot of the full supply chain of NVIDIA, of the semiconductor space, but then I expand into those end use cases. So a good portion are kind of like those data center infrastructures. I kind of like who can benefit from this innovation in the semiconductor industry. So I would say my portfolio is a mixture of the supply chain of semis plus the end users. And I think that's the end users are also a very, very big opportunity.
It seems like Oscar is now down 15% on the day at the moment. To go back to this question, so I think if you really want to have exposure to all of these companies, right? I think, and I was showing this right before, something like an SMH, or in your case, you said SMHX.
Yeah. Vanek, that one. Yeah. It should be there. I definitely looked at it in here too.
This one. Yeah, this one. So yeah, I mean, if you want all of those players, then for sure, I don't think it would. I mean, for me personally, I don't think I would just go and buy each and every individual company. I would definitely just pick a semiconductor ETF, either SMHX or SMH. See what you want to have exposure to, because you can literally see this right here. Also on fiscal.ai, bam, natural inclusion here. And see if these are the companies that you like, and if so, this is the easiest way for you to get exposure to all of these companies.
And Neil, this is actually a preferred way of mine, where first I would invest. If, let's say, I was starting from the get-go, I would start with an ETF like this. The market always gives you opportunities in the future, so you might get an opportunity for an ASML individually to own and increase that exposure individually, because now you like the evaluation. NVIDIA gives you a unique opportunity in the future as well, with some random news or fear headlines that come out. So start off, I think probably this would be my favorite approach. Start off with the ETF, and then uniquely, whenever you get that opportunity that the market gives you, and the market loves to give you opportunities. It really does. You just have to take them. It's when I would start to spread out into an individual basis.
Yeah. It's be patient. Be patient. I did want to. I mean, I didn't even notice the market was already open. Thank God I caught that in the last second. So we did have here before the market opened. So futures were up after weak private payrolls. So apparently the private sector lost 33,000 jobs last month, according to the latest report by ADP. Economists polled by Dow Jones expected payrolls to grow by 100,000 The report comes with the stock market near record highs, despite concerns that lingering trade tensions between the US and other countries could slow US and the global economic growth. Moving on to a nice little chart right here. Yeah, the trend here is quite clear, and apparently this is the first negative print since March 2023. So yeah, I don't know what the markets are doing right now at the moment, and I'll tell you that exactly in 5, 4, 3, 2, 1. It seems like the Dow Jones is down 0.2, S&P basically flat, and Nasdaq is actually up 0.15%. So clearly, they don't really care that much at the moment. Yeah, I don't know how much longer the non-cuts are going to last, but it does feel like it's coming either July or especially September. I mean, for sure, September, I think we're going to get a cut. Question here is, are we going to get it in July already or not? This is another good question from FF. Maybe I think it's Fabio. Do you think the stock market is priced as tariffs will pause again on the 9th of July? Which stocks do you think will get impacted the most if Trump will not pause the tariffs anymore? So the July 9th tariff pause was only for Europe or for everyone?
Well, I think it was wasn't there the 90-day extension for everybody? For certain ones, it started at a different time.
Yeah. Anyways, I mean, I think it's very EU centric, but I don't know. I feel there is either going to be a small deal, and then another extension, or just it's not going to be important anymore. They're going to say, "Oh, we're figuring things out, so here another extension right now." But if not, which stocks will get impacted the most? I guess European ones, right? European ones or companies that deal a lot in Europe, American companies that maybe import quite a lot of things from Europe. And then you have all the indirect impacts. The same story we've had at the start of April. Even if your company is not directly impacted, it might be indirectly impacted. Maybe their customers are getting impacted. So if they are getting impacted, you are getting screwed over, and so on, and so forth. So again, maybe we're going to get some opportunities next week. Maybe not. Friday the markets are closed, correct? For 4th of July.
4th of July, Miracle's birthday.
It's crazy. 12 months ago, I was in Vegas at the moment.
Really? You should have invited me.
I was at the World Series of Poker. Not playing, just watching.
Okay.
Not playing, just watching. Not yet, at least. But no, I don't know. It's $10,000 just to enter, and I was like, $10,000 just to lose. What's the point?
That's the attitude we don't want, Neil.
No, I'd rather just take 10,000 and play blackjack the whole day, or craps. I love that game now. It's like a very fun game. Trump said he will not extend the deadline.
Yeah, he sent some like shots at Japan too. Not literally, but just verbally. I got you to laugh.
Flashbacks. Okay, not extend the deadline. So maybe again, if that was really the case, I think the markets would have been red, completely red.
Mr. Couch is kind of a degenerate.
Am I a degenerate?
The gambler over here. Jeez.
Because of that, yeah. I mean, when the markets are green, you can enjoy yourself a little bit, no?
Exactly.
I mean, I would not have been doing this in 2022, for example.
A few AC trips, a few steak dinners. What's a few of that a year?
Ramen noodles for a year. Actually, I'm curious. And we can close the show out with that because I think we both have a meeting soon. A call, whatever you want to call it. SMCI, I wonder, still in the 40s. Still in the 40s. Yeah, I mean, it's definitely been holding up quite well. Let's see on the weekly. I mean, of course, since the April deadline, this thing has gone up steadily. So maybe the market is giving it now a bit more respect after the whole delisting drama, not delisting drama. Although the issues inside the company still persist because they didn't fix those things yet, and they've made it quite clear. But yeah, I don't know. As long as their guidance does not get revised on the downside again, I'd say, yeah. If we say we are them a clean, yeah, for now. I mean, as long as all the big players still buy from them, I guess it's fine.
To me, is I mean, I see the growth opportunity. I think we both do right now. I mean, we're seeing this massive demand of AI, even with a clean slate. Even if they didn't do any of that fraud allegations or whatever, that business is just not for me. It's too competitive.
Yeah, margin wise, it just doesn't make any sense.
Yeah. And yeah,
is there upside? Probably,
yeah,
but
I think so.
There's upside with plenty of other companies, and yeah, I mean, do I want to risk a third auditing issue? No, no. Again, if you can always go with a Dell, for example, right? Because I mean, the pattern here is quite clear. It's actually exactly the same thing as with SMCI, and I think Dell has better margins as well. So if you like SMCI, you could just go with a Dell. Yes, it might not look as cheap as SMCI, but at least you don't have all of the issues and the package that comes with it. So yeah.
Sounds good, Neil. Thank you, everybody, for being here. And we'll see you next week, unless maybe somehow we do a random morning stream tomorrow. But I doubt it.
Not tomorrow. I can. For now, I cannot, unless something changes. But for now, I cannot. I don't know if you're doing
gambling trip. Got it.
Actually, no. I don't know if you're doing something already in the evening. Maybe we can do a market close. But if not, we will be back next week, Monday, and on our own channels, of course, with videos on whatever.
That's my next title.
Whatever.
All right, peace out, man. Yeah.
All right, everyone. Thank you all for joining, and we'll see each other either tomorrow or next week. Have a great extended weekend.